Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, and it is 8:30 a.m. EST. We just had some data come out, so we're going to jump right into the charts and see how it is affecting everything. Looks like, well, this is a prediction I did live here, and that's been relatively accurate, huh? It's pretty good. Going back to Tuesday, calling that out on the 30-minute chart. That's actually, pretty darn good. Let's go ahead and zoom in a bit, though, and see what's going on the low time frame, because which data came out? I know it's probably the GDP. All right, so broke this down a little bit. I can see here on the 5-minute chart, this EUR USD, so this is USD strong, so this probably meant that the GDP numbers were strong. So let's go ahead and take a brief look at that page. GDP was just a tick higher than expected, and the unemployment claims were lower than expected. Unemployment being a lower impact event, but it's still there. And it's interesting. Unemployment always used to be a red envelope here, and that has now been marked as orange. So it might just mean that it's not as impactful anymore, or they just didn't code it right this week. But either way, doesn't look like this particular data is going to do much to the charts. Just a quick blip, and then charts will probably continue where they were going to go. We only have to deal with the fact that the PCE data comes out month over month, and that is in an hour and a half, right? That 10 EST. So the PCE data is, that's actually, from what I hear, the main inflation metric that the Fed looks at for their inflation decisions. So everybody watches CPI. Like all the traders and, the market really tends to watch and talk about CPI, but apparently the core PCE is what the Fed boys like to watch. We'll catch the NQ here in a minute. The NASDAQ, I probably should start paying for the data. I haven't been trading the NASDAQ, so I don't pay for the data. It's like $3 a month. It's almost like, who cares? I'll at least look at the NASDAQ. I know it popped up yesterday when some kind of a deal in Greenland was made. So that, we had the opener, we had the futures open right here, and that was a nasty gap down. That was having to do with Davos and all the talk over there. And of course, Greenland was what everybody was supposed to pay attention to. I honestly think Greenland was a bit of a distraction. If you look at Greenland, we've had bases there. We've had military bases there for quite a while, since like the Cold War. Right. And so, with that, it's like whatever the deal being made seems to be that we're going to, as the US, we are going to have more military bases. And this time they'll be on what is like sovereign land, like the British have in Cyprus. So that apparently is the deal that we can expect. And, so once the deal kind of started to shape up, all of the rhetoric stopped mattering quite as much, and the market popped up, right? Everybody thought the market was going to fall because all this Greenland talk, and then the deal happened, and or at least the deal started to shape up, and the market popped right back up, and now we're back into, just markets curling up to possibly go much higher. We'll see about it. I mean, if you zoom out, while the weekly open was dramatic, really, we didn't change much of anything in the structure. We didn't even go below the December lows, right? So, we broke below the January lows. I think definitely this was I think it was New Year's Day, or the first open after New Year's Day. We broke below that, didn't break December lows, didn't come anywhere near the November lows, which were the quarter 4 lows. So that none of that happened, and everybody didn't freak out, and so it was a lot of news. But this right here is looking rather bullish for the moment. If I were to zoom out, then this is a range below the highs, and there's a decent chance the markets will continue to go up. So all of the drama that occurred for Davos seems to more or less be over. Not a lot of talk about Venezuela at Davos, by the way. So if you'll notice, Greenland took all the news cycle. Like I said, Greenland, I think, is a distraction. So let's move into the charts again. This I expect to just continue sideways and up. That's what I expect. Just looking at the charts, not even looking at the the algo indicator stack. There is some need for price to calm down, but it seems like price is even grinding up against that. So there's some pressure where price is being pushed up against resistance, right? And so as long as this continues to grind up against that resistance, eventually it should break out like this, which means that there's just a lot of money being crammed into the market. And all the people who are selling off and taking profit, they'll probably get a panic right back in as soon as price gets back up to a certain point. And a lot of that's going to be leveraged money and futures and all kinds of stuff, right? So let's go ahead and move on. We'll talk about the USDJPY, which continues up as well. Now that's on the weekly chart, so we probably should go ahead and zoom in a little closer. But this is a high time frame bullish chart, much like the NASDAQ, right? So the Japanese yen is getting weaker against the dollar. And if we go to the 3-hour chart, then we're seeing that happen as well right now. Of course, today is Thursday, and tomorrow being Friday, the Bank of Japan is going to make their interest rate decision. So I will go ahead and share that screen once more. And if you look here, it supposedly is tonight, although there's a good chance it'll be overnight or tomorrow, or this is Thursday for Japan, right? So I should say it's probably Friday for Japan, Thursday night for the US, somewhere between for Europe. We'll see. They don't tell you exactly what time. And the question is whether or not the Bank of Japan will tighten. That's the real question. Are they going to tighten? Are they going to hike their rate? I shouldn't say tighten. I should say, are they going to hike their rate? Now, the indication there is that if they hike their rate, and if they decide to protect their currency again, because they hiked, 2 months ago? Or was it last month? So if they hike, every hike for the Japanese yen is like several hikes for the US, because there's just a lot of Japanese yen out there. There are bonds. There's a ton of Japanese debt out there. So because there is such a massive amount of debt, and because they've been basically at the zero bound or negative real rates for so long, one small hike is huge, right? When you go from 0.1 to 0.2, I'm just making that number up. But if you go to 0.1 to 0.2, you're doubling the rate, right? That's just one tick. If you go from 1.1 to 1.2, that's only just under a 10% raise. You're not doubling it. It's one tick, but it's 1.1 to 1.2. So all the debt that you have had out there at 1.1 becomes less valuable as your rate gets hiked up to 1.2, because now that new debt is worth a lot more, or at least somewhat more, and the old debt that's out there you can't sell as easily, so it's instantly devalued. That's what happens when you hike rates. Well, the Japanese yen has been out there as the world's liquidity source for quite a long time. And if you hike the rate and effectively double it, or even hike it effectively by 20, 30%, that's huge, because the rest of that debt out there, and there are monstrous amounts of that debt, it's instantly devalued by a lot, right? So everybody's collateral starts to go, kaput. Now, of course, because there is so much out there and the new debt that is coming out is going to be a smaller amount, then that devaluation is not quite as strong as it used to be. But of course, the question is, are they going to hike again soon? And will this be policy, right? And if the Bank of Japan signals that this is going to be policy, that the new debt that comes out is always going to be higher, then yeah, you might see actually a crumbling of a lot of the world's collateral, and markets will fall, and there will need to be a new solution. And some think that it'll be the British pound to do what the Japanese yen does. So for now, just to look at the charts, I would be careful with this, because there is in the charts a bit of resistance. You can see how price is at an indecision here on the 3-hour, where these candles are just kind of chopping for the last day or so, last 10 hours. And if price continues to chop in this area, you might end up seeing a reversal downwards once that data comes out. And that data is, like I said, it'll be like later tonight, EST time, or possibly tomorrow, overnight, tomorrow, whatever it is. We don't know. So that being said, that is a big landmine. And a lot of it's going to have to do with forward guidance and what is said by the BOJ. Now let's take a look at the euro. Again, we talked about this earlier. I kind of called this out, but if we zoom out, I'm going to delete this, even though I'm kind of proud of it. Let me go ahead and bring out the whole picture. So I'll go to the daily chart, and the euro has been ranging for quite some time. Now, if we zoom out, 2025 was a massive year for the euro, right? It piled up, and now it's been ranging ever since July. So the first half of 2025, the euro was just pumping up. And a lot of people believe that that was money going to ground, meaning that because of what was expected to happen. Oh, not seeing the charting. Thank you for that. Lisa, good to have you in here, Lisa, by the way. A lot of people believe that the change in posture, Europe and US, the way that Europe and US are interacting, a lot of it to do with Ukraine, a lot of Trump being in office and not wanting to cooperate with Ukraine, Trump wanting Ukraine to end at some point, Europe not allowing that to happen. That being the case, now that puts a wedge between the United States and Europe. And Europe is depending on, we got a note from Remote Closer. Yeah, living in Berlin, using the euro every day. Yeah, the euros, it's great if you are holding euros, right? It was good last year. Now it's just hasn't really made a difference for the past 6 months. But I'm trying to explain this geopolitically. So the way that the bond market works now, and it really always has, but especially now, is countries need to be able to sort of fake that they have something to sell. And Europe has a lot of investment in Ukraine. So if Europe can convince the world that, hey, we have a lot of money in Ukraine and we're going to make a lot of money out of Ukraine, then the rest of the world says, okay, we'll buy European debt because, they're going to have business, right? They're going to continue to make things. Now, of course, European debt, actually, there is no Eurobond really. I mean, there may be, but most of the euros are actually sovereign debt from countries. So German debt, Italian debt, French debt, and so on, right? So that kind of changes the picture a little bit of their debt scene. But in the end, it all kind of fits in the same picture in that the debt from European countries is going to be buttressed by their ability to show that they can make future income. And Ukraine was a lot of that future income. And if Ukraine falls apart and Russia wins, then a lot of future European income does not exist. And therefore, people will not trust European debt. So that said, a lot of money came back out of the US market and into Europe. Because if I were to overlay the NASDAQ or even the SP 500, you'll notice that as the euro went up, the SP 500 went down, right? And as, where's my down? Down right there. And as the euro flattened out, the SP 500 started to go back up. So money started to flow back into the market as soon as the euro stopped flowing up. So the word is that a lot of money left US markets to go into European markets. And I could, it seems that it actually went to European currency rather than into the DAX. It went, the DAX itself, which is the German stock market, and you have other, markets in Europe, but DAX seems to be the benchmark. The DAX outperformed in this period as well. So you notice that, let's put the SP 500 back on. ES1. We'll add that. This gets a little messy on the charts, but it looks like money. The ES1 started to fall, and the DAX actually remained where it was, and then the DAX actually fell, and they both rose. With the, what do we say this one is? That's the DAX, with the DAX leading the charge. So the DAX is outperforming this entire time. Everything kind of fell during the tariff tantrum, right? But the DAX outperformed during this time. So money was flowing into European markets. And then, of course, over time, everything evened out because, American markets are crack for the rest of the world. So that said, this is the European picture, and I expect this to range until it doesn't. Now, at some point, this probably will drop down. But geopolitically right now, the dollar's being held back. And for US exports, that's actually not a bad thing. So that said, I would expect this right now, if I were to play the euro, if I were to try to look for a trade, I would look for the euro to head up. And this is like going to happen next week or the week after. I'd try to get the euro at about 1.181. So $1.1812, and look to short that. And I just would continue to play this range because that seems to be a comfortable place for the euro right now. That would be a trade that I would look for next week. So that's a freebie out there. Good to have everybody on. Thank you for watching. We're going to head to the private live lab right now. So we have our Algo Factory members, and they're going to ask for custom charts, and we're going to talk about trades and stuff like that. But pretty quiet morning. I think a lot of the market is anticipating the core PCE. So the markets might not move that much until that time. And we'll be back next week. Pay attention to your inbox. First of all, what I do is a Monday report. I do a Monday market report, and it's pretty accurate. I don't get everything right. And of course, it's impossible to predict a lot of geopolitical events. So even though I chart what I think is going to happen based on the algos and based on the price action, of course, if there is some crazy event, that's going to throw things off. But long story short, I'm pretty good at predicting the future on these charts. I do, the NASDAQ, I do gold, silver. We'll take a quick look at, we'll save gold and silver for the private live lab. I do forex, I do Bitcoin. And if we have requests, even if you're watching this afterwards and you have something you want to see, just put a request in the comments. Say, I want to see this stock or whatever it is. And as long as it's something that I can track, like a lot of people ask for their favorite, crypto shitcoin. And those are not something that I can really call because they're just not, they're just gambling, right? So I may not do those, but for the most part, if it's a larger crypto, I'll still track that or I will chart that for you. So make your request in the comments, and there is a link in there for a free algo. And I'm going to cover these comments before we get out of here. But there's a free algo in there, guys and gals. So go ahead, click on that. It's a video where I show you how I build the algo. And once you've optimized it, you can actually connect it to your broker. It'll trade for you. But you have to optimize it. You have to learn how to do that. And I show you the tools that the traders use to connect to their broker. It's pretty cool stuff. So thank you all for watching. The last bit of questions here. We got Remote Closer saying, living in Europe. Each time I get my rent, I invest in crypto, silver, Algo Factory soon. Saving in Swiss francs, also not as stable as I thought. Yeah, I mean, the Swiss franc, I'll take a brief look at that. Much like it's like a reverse euro. It very, like, if I were to do the euro versus the franc, it's a very boring chart. There's not a lot of movement between the euro and the Swiss franc, right? Because they're very similar in a way. So a lot of people see, Switzerland as sort of the hard asset holder of Europe, like the gold holder. So a lot of their decisions, look at this chart, extremely choppy and boring. I wouldn't mess with the franc unless I had a good pattern for it. And there's always ways to do that. But yeah, it's, I hope to see you in Algo Factory again soon. Remote Closer, so come on in. By the way, a Remote Closer, we're going to actually raise our price this year again. We're going to hike it up. We're at 100 now a month, $99.98. And then we will go to $199.99. We're going to do that sometime in the next month or two. So, but you say next weekend, so you'll be in before that. if you join next weekend, we'll see you in there before we double the price again. So thank you all for watching. Links in the description. And if you get the free algo, I will email you with the weekly update as well. And that's going to, again, forecast what I think is going to happen. So we'll catch you guys later. Don't forget.
Join us or die.
Just kidding. You're not going to die. We love you.